A good trader doesn't trade every market moves. A good trader knows when to trade and when to do nothing. I've always said this here, that it is easier to make money in a trending market than in a ranging market. Now, how do you identify a trending market? And how do you identify a ranging market? And lest we forget, how do we also identify a trend reversal? Now, by trend reversals, how do we know if a bullish trend is turning into a bearish trend, and if a bearish trend is turning into a bullish trend? Well, before I dive into all of that, please help me grow this channel by crushing the subscribe button if you haven't. Like this video if you enjoy the content, and also leave us a comment down below. The more comments you leave, the more viral this video will become. Thank you as you do so. Now, I have talked about trend ranges and trend reversals in one of my previous videos, and I've also talked about it in every little details in the course. And by every little details, I'm talking about 70 minutes long details. Don't worry, we are going to look for trading opportunities for next week, but first, let's do this. Now, we are going to talk about trending markets. Now, there are two types of trend. We have a bullish trend and we have a bearish trend. Now, how do you identify a bullish trend? I'm doing this again, right, by the way, for those for our new subscribers, or for those that are just joining the community. All right, I've done this severally when we started out this channel, but I'm just going to do it again. Hopefully this is going to help some of you out there. Now, in a bullish trend, remember, price doesn't just move in a straight line up. No, as a matter of fact, price moves in a zigzag manner, like this when trending up, and also like this when trending downwards. Now, in a bullish trend, price is expected to be making continuous higher highs and higher lows. That is how you know you are in a healthy bullish trend. All right, and of course the reverse is the case when you are talking about the bearish trend. But let's start with the bullish trend. We are also going to talk about the bearish trend. So in a healthy bullish trend, price is expected to create highs. Price is expected to create high. That means this is a low, then a high, then a higher low, and then a higher high, right? Why is this a higher low? Because this is a low and this low is higher than this low, right? So it makes this a higher low, right? Then a higher high. This is a higher high now because we have broken above this previous high here. All right, this was a low, this was a high. Now this is a higher low, and now we have a new higher high. Let me just write HH here for higher high. Sorry, this is a higher high, then this is going to be a higher low. All right, I'm sorry, my alphabet looks bent, but I believe you get the whole idea, right? So now, in a typical bullish trend, we're expecting price to come back into this broken level that has been tested previously here, all right, then give us a bounce, all right, creating a new higher high, breaking above the previous high here, and of course giving us a new higher low. All right, this is the characteristics of a healthy bullish trend. Then we expect a pullback again into that zone, right? Then creating a new higher high, breaking above the previous higher high. That means creating a new one, and of course creating a new higher low. All right, so now we have a higher low here, higher low here, higher low here, then we have a higher high here, higher high here, and a new higher high. All right, so this is how you know we are in a trend, but this time a bullish trend. Now let's look at a bearish trend. So in a bearish trend, it's pretty much the opposite of the bullish trend, only that this time price is expected to be creating continuous lower highs and lower lows. All right, now let me just plot this here. You have to start with the first line. This will be a high and this will be a low, right? Then we need to create a lower high and then a lower low, breaking above this previous low. Now we have a new lower low. Why is this called a lower low? Because this low is lower than the previous low, right? And this is a lower high, right? Why? Because there was a rise here, so which makes it a high, but it's not a lower high because it is lower than this previous high here. So that's why we call it a lower high and a lower low. Now in a typical bearish fashion, price is expected to pull back into this previous zone here that has been tested here before, all right, creating a new lower high and then coming back down and breaking below the previous what lower low, all right, and then we're expected to continue in the same fashion. Price pull back into this zone, this particular zone that has been tested before, and then coming back down, creating a new lower low, all right. So this is how you know you are in a healthy trend, all right, whether bullish or bearish trend. Now that I've shown you the diagram here, let's go to the chart so that I'll show you what it looks like on the chart. So now looking at this chart, this is the dollar index, by the way. You can see typically the diagram I just drew from the previous slide, right? From below, price was trending upward, right? We came into this zone, created a new what higher low. Can you see that? Then we came here, created a higher high, breaking above this previous high, right? So yeah, this was the previous higher high, right? But now it has been broken, so we have a new higher high, leaving us with a higher low, right? And what happened? Price came back into the zone that has been tested previously. Can you see that? Then from there did what? Bounce upward, creating a new higher high, breaking above this previous higher high, leaving us with a higher low. Then what happened? Price came into this zone, testing this recently broken level, and what happened? Price pushed higher, right? Now this is a bullish scenario. Now let's look at the bearish scenario. In the bearish scenario, you can see how price blasted down, right? Then came here. At this point, we didn't know if we were creating a new higher low, right? But what happened? Price came down here, breaking what? Below this previous level, then went back, retested it, and came back down again. I'm sorry my lines are not straight, but I believe you are getting the whole idea I'm trying to talk about. Then price tested this zone that has been broken before. As you can see here, we went back, tested it, broke below it, and now we went back into this zone, the previous lower low, as you can see, then retested it and then blasted down again, creating a new lower low. So technically we are still bearish on the what? Dollar index. And of course, you know, the dollar index measures the strength or weakness of the dollar pairs. So whatever happens on this chart affects the dollar pairs in our normal currency trading. So now that we've talked about the trending market, which is the bullish and the bearish trending market, I'm sorry, time will not permit me to go into the nitty-gritties. In fact, I won't be able to go into the nitty-gritties because this has been discussed in the course in every little tiny details and how to take advantage of them, all right? But I'm just trying to give you heads up here how the market behaves and what you should be expecting in a bullish and in a bearish market environment. But if you want the full details of what I'm talking about right here, then you have to get the course, all right? So now we've talked about the bullish and the bearish scenario. Let's talk about a ranging market. Now, a ranging market, how do you identify a ranging market? Well, it's simple. A ranging market moves like this to the right. You see price making almost the same highs and the same lows, and then you notice price moving to the right like this, all right? So this is how you identify a ranging market. It's not always perfect like this. Sometimes you can see something like this. Let me just draw the support. This is the support. Sorry, that was wrong. This is the resistance, all right? And this is the support, right? Then let's say price was coming from above, then you see price come into this support, bounces off, come into this resistance, rejects it, comes back into this support and fail to create a new lower low. All right, so now something like this now happens next. When you see this, then prepare your mind that we might be in for a range, and then when we come back into the resistance and you see price reject the resistance, then that range is established. How do you identify a range? Well, it's simple. I'm just going to explain it in a layman's term. When you see the formation of two equal highs and two equal lows, then prepare your mind because that is the beginning of a range, all right? But also it matters on the time frame. I don't expect you to start looking for a range on the 15 minutes time frame or the 5 minutes time frame right? So you want to spot these ranges on the higher time frame, because the higher the time frame, the more reliable whatever signal you generate from them is. So this is how to identify a range. All right, I'll take it again. When you see the formation of two equal highs and two equal lows, then that is the beginning of a range. Now the next on our list is trend reversals. How do you identify a trend reversal? Remember, a trend doesn't move bullish for life. At some point, what goes up must come down, and what comes down in Forex goes back up. All right, so now how do you identify trend reversals? This is another very, very important secret to trading success. I'm just going to show you briefly here. All right, so let's say price is creating higher highs and higher lows, right? It will get to a point whereby the bullish trend will be exhausted and will start coming back down below. All right, so around this area, a trend reversal has occurred. Now, how do you identify a trend reversal? There's a simple strategy I use to identify trend reversals. All right, and I do this on a daily time frame. Like I said, I'm not going to be able to explain everything in details in this particular video. If you want to find out more, then you need to purchase the Let's Trade Academy Forex Professional course. However, let me just show you what I'm talking about. Now, there's a little technique I use, and I determine my trend reversals on the daily time frame. Now, there is a system I use called the 1 2 3 formation. 1 2 and 3 formation. Now, how does that happen? Remember, in the bullish trend, I'm going to use a bullish scenario to explain this. Price is expected to make continuous higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, in that manner, right? Then let's say, okay, there's a resistance up here, all right, that has been tested multiple times before. Then price keeps making higher highs, coming into that zone. Then what I want to see is the 1 2 3 formation. And what is that 1 2 3 formation? So from this place, price has come into a resistance that you've mapped out previously, that has been tested multiple times, and price has reacted to that resistance significantly previously. Now, when price comes into that zone, you're expecting a reversal, and then you get something like this. Now, notice something. Price has created a lower low here. This was the previous higher low and then a higher high, and now price came down and closed below this previous area here, right? Now we expect price to come back into this zone. If we are going to start going bearish, we expect price to come into this zone and then bounce off, creating a new lower low, which is below this low, right? Now creating a new lower low, right? Now this is what I call the 1 2 and 3 formation. All right, so this happens, I determine this on a daily time frame. All right, so now we created a new lower low, that will be my 1, then a new lower high, that will be my 2, then a new lower low, that will be my 3. So at this point, I've established that we are in a trend reversal. All right, so because now what is happening, remember, a typical bearish move gives us a low, a lower high, and then a lower low. So that's why I name it the 1 2 and 3 formation. All right, so for the bearish scenario, you can flip this, all right, because this is the bullish scenario turning into a bearish trend. So just flip this for a bearish scenario into a bullish trend. We've talked about trending market, which is bullish and bearish trending market, and we've also talked about a ranging market, how to identify a ranging market, and now we've also talked about how to identify a trend reversals. Don't forget, I determine trend reversals on the daily time frame. All right, I just wanted to let this little piece of information out there. Of course, if you want more on how this works perfectly for me, then you have to grab the course. All right, the link is down below, so just click and make payment. Everything is fully automated, and purchase the course. Let me show you in real life market how to identify trend reversals. In one of my previous videos, I'm going to tag the video up around here so you can go watch that video. Let me go to the monthly time frame. On the monthly time frame, you can easily see that price is in a bullish trend, right? Creating higher highs and higher lows, right? And now currently, if you've been watching my videos, I'm expecting price to come into this zone that has been tested multiple times before we continue bullish. Or if we break below, then we know we are in a trend reversals. That's only when we create a new lower low here, right? Or when we break below this trend line, all right? But for now, we are still in a bullish trend. However, we are having a reversal here. Now, if you've been watching my video, the video I'm going to tag here right now, at this point I started calling the dollar short, all right? And this was why I just used simple market structure and trend reversal. Now this was what I did. Let me go to the daily time frame. Remember, I determined trend reversals on a daily time frame. Now price was around here that time when I started calling, price was around here rather that time when I started calling dollar short, and this was how I knew we were going to go into a trend reversals on the dollar. I plotted my trend line like this, all right? Now what did I plot here? I captured the first touch and the second touch, which is what you should consider when plotting the trend line. You need two touches, then project it into the future and wait if you are going to get a third touch bounce, a third touch rejection, or a breakout. And actually we got a breakout, so I've captured 1 and 2 here, then I projected into the future. In fact, we had a third touch which bounced off, and then we broke and closed below. And at this point, that was when I started calling dollar short. And why did I call it dollar short? Why did I start calling the dollar short? Because we had a breakout and we failed to create a new higher high here. All right, so those that have grabbed the course will really understand this better. Failed to create a new higher high when this price bounced off this third touch of a trend line, because in a healthy bullish trend we expected to create a new higher high, right? Which we failed to do. Instead, we came down with this strong bearish momentum, taking out 1 2 3 4 5 6 7 8 9 10 days of price action, right? Because this is the daily time frame. So it took out 10 days of price action, breaking below a trend line and failing to create a new higher high. So that was when I knew the dollar is going to start collapsing, and that was when I started calling dollar short on my videos, right? Now as you can see, we came back up, created a new lower high because we failed to come close to this or break above it. So a new lower high, a lower low, a lower high, a lower low, a lower high, a lower low, right now we are still in a lower low because we failed to create a new higher low. Now how do we create a new higher low? Until we break above this level. Let's look for trading opportunities for next week. Remember last week I said I'm expecting a manipulative week. If you watch my previous video, I said price, this is the weekly time frame by the way, so price came into this zone that has been tested multiple times on the weekly time frame here. Price bounced off, pushed down here, came back into that zone. We saw some form of rejection. Now we broke above, we came back to retest it before bouncing upward, and now we came back into that zone, and that is why we are getting this reaction here. And in last week's video I said I expect price to sustain above here this week, and that is exactly what has happened. All right, so now what will I be expecting? Before I have the confidence to start trading in favor of the dollar, we have to break above this line that I plotted here. Why did I plot this line here? Price reacted to this line before. Price has reacted to this line before. If you see, when we broke below, we are doing on the weekly time frame now. It's not that obvious. If I go to the lower time frame, you're going to see, but I want this video to be short because it's getting too lengthy already. We came back into this zone and price rejected it, pushed down, and now we've reacted to that zone. Now I'll be expecting price to come into this zone, come back into this zone and give us some form of rejection before coming back down to this area, which is my second level target. So for the fact that we've had, if you check now, this is the weekly time frame, so now we've had 2 weeks of bullish price action, because if you look at these candles, they are both green, right? Is this green? By next week I'll be expecting some momentum to the upside. However, this is December, so you want to be careful because there's nothing certain when it comes to this time of the year in the forex market. All right, so we'll have so many manipulative moves because there will be, what we'll discover is lack of proper direction in the market. Remember, my long-term goal is here, but however, we still have this zone to contend with, this zone that has been tested multiple times. Now let's go to the daily time frame. So on the daily time frame, in fact, let's go to the 4-hour time frame. Remember, I'm trying to establish what I said last week. Last week I said price is going to move in a manipulative manner, which is exactly what price has done. This line you see me plot here, this blue line, if you look at the date below, you see Monday 12th 2022, which was last week. All right, so price opened around this zone. So in the early part of last week, price pushed down, then towards the end of last week, price pushed back up. So at the end of the day, we really moved sideways. If you look at this zone here, if you look at the date here, is Friday 16th, which was yesterday as at the time of recording this video. So you can easily tell that price actually moved sideways, which is manipulative. If you ask me, it didn't go in a specific direction. All right, so between this zone and this zone, we pretty much moved sideways. Market opened here and market closed here. All right, so to me, this is a sideways movement. All right, so however, there's a channel that has been broken above and has been retested. Now my best bet is for price to keep pushing higher. Anything can happen, because in the past 2 or close to 3 months now, dollar has been bearish. All right, dollar has been bearish from this zone. Dollar has been bearish, which is around September, if you look at this zone, because from this zone we failed to create a new higher high, right? So from this zone, dollar has been bearish. If you look down, you'll see September 2022. So dollar has been bearish. So for now, we are still bearish, but however, I'll be expecting price to push up based on the fact that price has broken out of this trend line and retested it. All right, but also expect manipulative movement. So the best bet is to even stay out of the market. But because I do these videos weekly, I have to come up here and say something, and I have to try my best to give you the best. All right, so now let's go look at some pairs and look for trading opportunities now that we've seen what may happen next week on the dollar index. All right, and I will start with the Nzdusd. Nzdusd on the weekly time frame. If you look at this zone to this zone, I've plotted my Fibonacci retracement level, and price has created a doji. I like to call this a doji. I know some people will argue this, but whatever it is, to me, I would like to regard this as a doji candlestick, an indecision candlestick, because if you look at this zone, there was a bullish momentum here, then here it got smaller, and then here we got a red candle, which is a doji candle. Price pushed up, came back down, and we created a red doji candle at the 61% retracement level, which between the 0.5 and the 0.6 fib level is regarded as the golden zone. Now we have a doji at that golden zone on the weekly time frame, which is a higher time frame and is dangerous to ignore. Now we have this doji here. Now I'll be expecting price to keep pushing lower before we come into this trend line. At least I will expect a temporal push lower. However, we may go higher, but let's scale to the 4-hour time frame. Okay, first of all, let's look at the daily time frame. On the daily time frame, you can see price is at a level that has been tested multiple times. Here, this came close, but it didn't really touch that level. But here there was a rejection, like a double bottom, before pushing price up. Now there was a rejection here, and there was a rejection here, and now it's obvious that we have a rejection here, right? So I will expect some kind of a push lower. So on the 4-hour time frame, if I zoom out, you can see price has tested here twice before, and coming into that trend line again, price is reacting to the third touch of the trend line. Remember, from the higher time frame, we've just rejected an important zone, right, that has been tested multiple times. This is the daily time frame. So back to the 4-hour time frame. Now we are trading on this trend line, and if you look at the bearish candlesticks from above here, they are big and bold. However, we are reacting on this trend line for the third touch, but I'll be expecting price to break below. So to start selling, we have to take out this trend line, all right? But price might want to go back up and create a double top, right? Because we have to consider that possibility also. So that's why we also have this trend line above. So if price takes out this trend line, maybe give us some kind of a retest, then we can buy back into this zone or this previous high that was created here. But however, if price breaks below this trend line, then we can start selling with our stop loss around here and our take profit around this zone. Now let's look at the oil. We had a pretty good trade last week. I sent out these charts on the Telegram and it played out exactly. All right, I started from the, let's start from the weekly time frame, by the way, for the purpose of this video. Price has broken below this trend line. In fact, let's go to the monthly. Let's look at this from the monthly perspective. There's a zone here that has been tested multiple times here previously as a resistance. We broke above it and we've used it as a support. We broke below again, used it as a resistance. We've broken above now. Now we're going to use it as a resistance, or are we going to break below and use it? Now we're going to use it as a support to push price higher, or are we going to break below and continue trading lower? Well, we cannot say for now, because obviously the best bet is price is going to reject this zone and start going upward as it stands. All right, so let's go to the weekly time frame. On the weekly time frame, we have a trend line that has been broken below. Then if I zoom in properly, you can see we have a double top here. It's more obvious on the daily time frame. The zooming in now, you can still see clearly that we have a double top here, and this is the broken neckline, and price has come back to retest that broken neckline. Hence the reason we have this big bold candlestick to the downside. But last week we closed with this bullish candlestick. That double top I showed you on the weekly time frame, it's more obvious here on the daily time frame. We have a double top here. It has played out nicely, and price is still creating continuous lower highs and lower lows. Remember, we talked about it in the beginning of this video. You can see we created a new lower low here, taking out this previous low, and then we created a lower high, and now we've created a new lower low, and now it looks like we are creating a new lower high. All right, so if price should keep falling, then we're expected to create a new lower low, right? But because of the condition of the market right now, I think your take profit should be at the same level in case we want to come here and create a double bottom to continue pushing price up. Remember, we are sitting on a monthly support. Let's go back to the monthly time frame, so I'll show you what I'm talking about. So you can see we are sitting on a monthly support, right? So if we shouldn't be surprised if we get that double bottom on the daily time frame to push price higher. So that's why I would suggest your take profit should be around this region. So if we actually now create a new lower low, then we can wait for a pullback to do what? Join the trend. All right, but for now your take profit should be here. That's this equal low here. All right, let's go to the 4-hour time frame. On the 4-hour time frame, I don't even need to analyze this because I did this in the Telegram channel. So if you are watching this video and you are not yet on the Telegram channel, the link will be in the description below. Click the link to join the channel, because whatever I drop here, when things changes, I always go back to the Telegram group to drop new updates. All right, so now let's see if we are going to come back into this broken 4-hour zone to get a bearish momentum to keep pushing price lower. All right, but however, if price decides to start going higher from here, then we'll wait for price to take out this trend line. Let me zoom out so that we can get a clearer picture. I'll just delete this, I'll delete this. If price should keep going higher, then we'll wait for price to take out this trend line and this mini resistance here. This video is getting too lengthy, so I won't go into detail. So we'll just break above this zone to start buying. All right, so that's all for the US oil, the crude oil. Let's go to Euro USD. Let's start from the weekly time frame. There's no need to go to the monthly time frame. It's obvious that on the monthly time frame, price is super it has been bullish for at least some couple of months. All right, on the weekly time frame, price is still finding it difficult to take out this counter trend line. All right, you can see price broke within last week. Actually, my last week call was that price may see some rejection before pushing higher. However, we pushed higher, and now price is still finding it difficult to break clean of this trend line. Right, let's go to a daily time frame. On the daily time frame, um for Thursday and Friday towards the end of last week, we saw some impulsive bearish moves. Right, now are we going to come and retest this trend line to keep pushing price higher? Well, I guess we'll find out when that happens. But for short-term trading opportunities, let's come to the 4-hour time frame. Now we know there's a resistance that this zone is reacting to from the higher time frame. Let me go back to the weekly time frame so that I will show you the area I'm talking about. You can see price is reacting to this zone. And why is price reacting there? Because price has reacted to that zone previously. Looking left, price has reacted here, here, and now it is reacting here. So if now that we've broken below this trend line, we should expect some continuous bearish push to the downside. All right, but price has been bullish for, like I said, 2 months now. So what I would like when price has been super trending in a specific direction, just a direct break and sell. If you want to sell right now, then your stop loss should be wider. But if you wait for a break and retest, then you can use a smaller stop loss. All right, so I'll be expecting price to keep pushing lower to this zone first. Let me map it out nicely for you so that you can see to this zone first. Then if we take out this zone, then this will be our next target. All right, so that's that for Euro USD. So I'll just take one more and let's call it a day. So let's start. This is the Australian dollar, US dollar, the Aussie dollar. All right, so last week we had a bearish engulfing candle engulfing this doji, yeah, right? So we took out this candle and part of this candle. All right, so with this kind of candlestick, I think I would expect a mini push to the downside. Let's go back to that weekly time frame. On that weekly time frame, you see price is reacting to a weekly zone. If I zoom out, you can see price has tested that zone multiple times before. Just follow my mouse, or let me just circle it out for you so that you can see it clearly. Let me pull up my marker. You can see price has reacted here before, here, right here, here, then this zone also. And now if I zoom in, you can see price is also still reacting to that zone right now, creating lower low. That this is a low, this is also a lower high, and this is also a lower high, right? So I'll expect price to keep pushing downward on this pair next week. All right, now we've broken. Let me go to the 4-hour time frame so that you see clearly. On the 4-hour time frame, we've broken out of this channel already. We know this zone is reacting to a strong zone from the higher time frame. Right now we've broken down. I was expecting this to push with some kind of impulsive move to the downside on Friday, but we pretty much move sideways. Remember, this is the 4-hour time frame, right? So let me just move this here. This is the 4-hour time frame. In a single day, we're expected to have 6 4-hour candlesticks, because 24 divided by 6 is what? It's 4 hours, right? So you can see we had 1, 2, 3, 4, 5, 6. So for the whole of Friday, we pretty much moved sideways, right? So now I'm expecting two things on Monday. You see that we keep pushing lower directly from here, or I won't be surprised to see price come into this zone here before we now start pushing lower. All right, so I'm just giving you two possibilities. We can pull back here before the drop, or we can just drop straight up from here. All right, so that is that for the AUD USD. So as a matter of fact, I'm just going to stop the charts that I'm unable to drop here. I'm going to do that in the Telegram channel. All right, so if you are not yet on the Telegram channel, the link is down below. Just click and join the channel. So now I've given you my point of view for next week. It is the end of the year, by the way, so I need you to take note of that. So volume will be less and we may experience manipulations next week. All right, I would advise you stay clear of the market if you can. All right, like I said, I just did this video so that if you must trade, at least you should know the direction or what you should be looking for to make trading opportunities. All right, but for me, I might be staying clear of the market except if I see a very clear opportunity to take a trade. All right, so with this, we've come to the end of this particular video. So if you want to learn how to do these things, just purchase the course, and everything has been explained in details there. And our current promo is going to be ending this December. All right, so if you buy now, you have some percentages to enjoy, some discount rather to enjoy. The link to the course is in the description below, so just click and make payments to get the course at a subsidized rate. By the end of this month, the prices goes back to normal, and so many of the bonuses will be removed. All right, so do me a favor by hitting the subscribe button, turn on the notification bell, comment under this video, and also like this video so that the video can go viral. Thanks for staying to the end of this lengthy video. I'll see you in the next video. Bye guys.